The effects of climate change are starting to affect all of us. It's undeniable. All of this is going to take investment dollars and it's going to take support, and that's why I think it's important to invest in climate tech now. So how do we decide to take a risk on some of the early stage ventures that we're investing in? Well, first of all, BDC's mandate is to support clean tech companies and where we see Canada heading in the future. So we've decided as an organization that our risk appetite for this sector is going to be higher than maybe for some other sectors. Not all ventures work out, that's the whole model of venture capital, but with the right support and the right management team, we feel that ones that have the most GHG implication are worth supporting and will fundamentally be successful. We validate the technology, we validate the management team, we validate market size, but we also look to see who the company is partnering with and who the company has partnered with in the past. We'll do our due diligence with those organizations, get their technical reports. We'll see if they're part of an accelerator and they're getting the support that they need to help a young management team manage some of the stumbling blocks that are going to happen. Clean tech investing, although it is growing, as an overall percentage of venture capital is still very low. Investors have to have a long investment thesis and have to be patient, and they also have to have a large enough fund that they continue to follow on and support these companies. And so often the VCs, traditional VCs, are looking for companies that have faster commercialization and faster exits. But that's changing slowly. We're seeing more and more funds being stood up in Canada and globally that are focused on this very important sector. So that's something that we're very happy to see and is going to have a positive effect on the whole entire market.